necklace.
Hi everyone, I hope you guys are just excited as I am to be here. So I would like to open this session by properly welcoming all of you guys and thanking you guys for joining Coinfest 2022. I hope you have been having a wonderful time so far. So before we get onto it, I'm just gonna give a little bit of introduction of what this session is gonna be about. So we have here the panelists from Deepcoin, Crypto.com, also Nansen, and we're gonna be talking about market cycles, which kind of sound boring, but if you think about it, every time you talk to your friends about crypto, you guys will be talking about cycles. You're always like, oh, are we in the bear market? Are we in the bull market? So this is where you can hear the professionals' view from their respective sectors about their view on the market cycle. So I hope you guys will have like a lot of takeaways from this session. So before we start, I'm just gonna open the forum and give the time for our panelists to introduce themselves. So can we start from Michelle from Deepcoin and we go to crypto.com and then Nansen.
Hello, everyone. I'm Michelle. I'm the Global Marketing Director at Deepcoin. We are a crypto derivatives exchange based in Asia. We've got headquarters in Singapore, some folks in China, some in Indonesia. We're growing in the West. And yeah, happy to be here today and outside with the lovely people.
Carl Mohan, GM for APAC for Crypto.com. Look, I know you guys were hoping that Matt Damon would be here, but uh, the best you're going to get is me today.
Damn.
Hi everyone, I'm Ingrid from Nansen, which is a on-chain analytics platform. We recently raised our Series B, and what we do here at Nansen is that we enable crypto investors, funds, and operators to better understand on-chain data so that investors can discover potential investment opportunities, perform due diligence, and protect against your hedge against portfolio environments. Yeah.
Okay, thank you guys for the introduction, right? So we're just gonna get into it, and the first question, the first topic we're gonna be talking about is quantifying bull and bear market. So how do you guys actually like, from your perspective, what kind of indicators do you look at to identify what kind of market cycle are we in now? Can we start from Michelle, and then we go to Carl and Ingrid?
All right. Yeah. So, I mean, clearly we all know we're in the bear market right now. And from a Deepcoin, from our user base perspective, we before this downturn, we were trading probably daily trading volume of about 3 to 5 billion. And now, after the downturn, our spot really dropped, and the futures trading dropped to about 1 to 2 billion, sometimes less daily. So, we definitely understand that, with all of the inflationary issues, there's less money in people's pockets now, and they've had to be more conservative. So we've lost some of those players, and then of course I think with day traders are just being more prudent with their funds. But we're hoping it comes back, right? One of these days.
Absolutely. Hey, I think if we could predict the bull and bear cycles, I think we all wouldn't be here talking about it. Now, I think if you think about it, it's been an age-old question since the first invention of a financial product. When is a bull cycle? When is a bear market? And I think beyond all of that, I'm a big believer of a very, very, very long term. So if you're taking a 15, 20, 30-year horizon, then all these cycles are meaningless because ultimately, A, do you believe on a particular product, or in this case, whether it's Bitcoin, Ethereum, and all of that, does it have a long-term validity? The answer is, a resounding yes. Then these small little fluctuations are literally market fluctuations that are meaningless because the trajectory is still moving on an upward trend.
So I actually do agree with Carl here, and I think that if we look at it from a wider time horizon, it's uh, I think if we look at a short time horizon, it's easy to say that right now we are looking at a very bearish trend. But if you look at it from a wider perspective, is that we are looking at an upwards like trend. If we look at Bitcoin's like halving like cycles, right? Compared to previous cycles, is that there's not as much of as sharp of an uptick, probably in terms of like market adoption and market maturity and like user adoption is probably not going to be as much of an uptick as in previous cycles. But I do think that in the long term, we are going to see, not financial advice, we might see a rise and more maturity in markets.
Yeah, I actually totally agree with like your viewpoints there, and especially it's interesting how you said that if we can predict already bull and bear, maybe we're not all gonna be here.
Yeah.
We're all gonna be in Bahamas.
Right.
Yeah.
Right.
actually, just a little bit curious, right? So in terms of prediction, I understand that nothing is perfect, but do you guys have any like reliable lead indicators that usually, when you see this indicator hitting this point, then you know that, we're definitely hitting bear or we're definitely hitting bull. Is there any such thing?
Yeah, I think that with especially recently, we've always thought crypto's, deflationary. It doesn't correlate like other things, but I think in the recent years, there's definitely been more of that correlation, especially now with, all the macroeconomic factors, right? So ESG is being more prevalent than I think ever before, unfortunately. And, these inflationary changes has really been a big cause of the strife in the industry lately. But I also think another small indicator is really understanding the institutions, right? Institutions are coming into crypto more and more. And that's really playing a factor in how the markets move, right? These institutions have a lot of risk controls, very sophisticated risk controls and hedging. So if they're in the markets and they're playing with them and there's a bit of a dip, they're going to start selling off their assets, right? So that's going to cause a big shift in maybe how retailers or anybody else has to, interact with markets. So I think that's something you need to look out for. Watch where the money is, right? Watch these companies. We're just talking about in the back how much companies actually have more control in the markets than you think. So pay attention to what they're doing.
What do you think, Carl?
Look, Olivia, I believe in one thing. Before I walked in here today, the organizer was telling me that it was going to rain. And as many of you can tell, it is not raining at the moment. And apparently, because there was a shaman here who came and did some prayers and the rain went away, I would love that shaman to visit us and also give us an indication on the price movement because it's certainly not the pigeons outside my house every morning that's giving me the indication. So I'm sure the shaman would do a better job. But look, I think again, I come back to this view. In the short term, it's almost impossible to predict price fluctuation. Almost impossible, right? I suppose you could get, indicators in terms of, you can be a technical analyst and say, hey, guess what? There's a price flaw because there's a number of trades that are locked in. There are expiry dates for contracts that you can look at. But ultimately, I think, the amount of data available today in this cycle compared to the previous cycle is a lot more phenomenal. Like, access to mempool, for example, was something that in the previous cycle, you'd be lucky to be able to access them. But today you can. So I think, jokes aside, there's a lot more indicators today that are available. And not only that, it's a lot more accessible. I think the second part is a lot more crucial, whereby companies like Nansen and so forth have actually pioneered the accessibility of that data.
Yeah, so I think that in regards to looking at how we see if it's what are the leading indicators at Nansen, one of the things that to turn on to Carl's point is that we have a dashboard called the Stablecoin Master, in which that allows you to see at a overview of like what's the inflow and outflow of like stable coins, right? Because like let's say if you're an investor, highly likely you're going to be entering via like USDC or like USDT and before you go into any other like altcoins, right? And so by understanding like what does the on-chain data show us, you'll be able to better understand the trends, economic trends, and thus determine if it's possibly going to be bearish or bullish.
Oh, thank you. That's very insightful, actually. And just related to what you said about there's a lot more institutional investors now in crypto compared to before. Would you agree if we say that there is an increased correlation between, the traditional financial markets and cryptocurrency markets currently? Like, how we correlate with equities now? Would you say so?
Yeah, I mean, I think it's closer than ever before. I think there's still a bit of deviation, but yeah, I mean, at least with the Western markets, maybe not in some Eastern markets, they do things a little differently, but in the West, for sure, there's something going.
Look, that's definitely the case, right? I mean, currently the entire market is correlated to the S&P 500. If you look at it, tech stocks, and there's two hypotheses here. One is investors, and maybe it's retail investors, are also invested through trading platforms like Robinhood and so forth that have access to the Tech 500 stocks. and therefore when they have an exposure there, they also have an exposure in crypto. Or the other hypothesis is you have greater institutional dollars moving in or highly sophisticated investors that have allocated a portfolio to risk-based assets. And if you look at tech, they might have classified tech stocks the same way as at least the top crypto coins, and that investment cycle is just flowing in the same direction at the moment.
I think that with the current macroeconomic cycles, we can tend to take a look at what the larger institutional players are doing, right? Such as um, for example, when it comes to investments, and especially with what's going on with like the geopolitical risk and the rising tensions, what you may want to do, even as a institutional investor or a sophisticated investor, you might want to even think about diversifying your assets so that in the event if there's like geopolitical uncertainty, you will be able to allocate your funds accordingly.
Okay, thank you. So actually, let's move on to like the current time, right? So currently, do you see us in the bear market? I mean, is that arguable at this stage? What do you think, Michelle?
Are we in the bear market?
Yeah.
That's the question. Yeah. I mean, I'm shorting all my trades. Anybody else? I'm not long in anything right now.
Man, I can tell you, every morning I open up my portfolio in my crypto.com app, by the way. I'm a sole bull about it. I would love to see a sea of green, and every morning it's like, it's like you wake up and you go like, please be green. And, it's green a little bit, but then you look at the percentage point movement, it'll be like 0.1. And you go like, ah. So is it a bear market? Look, there's no kidding. We are in the bear market. I think it's a global bear market, by the way. It's not just isolated to crypto. My share portfolio stinks at the moment as well, and I think many of the audience would share the same feeling. But look, what can we do about it? Nothing. It's just another economic cycle, and if you don't need to sell, you're all good.
I think it's weird. Like Ethereum's the only coin that's kind of in its own little like doing its own thing lately. It recovered like 100%. And sometimes I'm like, what's going on with Ethereum? I guess maybe this merge, everyone's excited. I don't know.
So yes, and I think that when we take a look at what the data shows us, right, is that especially on like Nansen, is that more that we are starting to see like more outflows coming out of like stables in August, and so we might not see like more market participants coming to like crypto necessarily anytime soon. But I think that's where to answer your question, Olivia, it's like yes, I think we are at a bearish stage right now, but I think that it's going to recover eventually.
Okay, sure. So, okay, talking about the recovery, potential for recovery, and also exogenous factors that affect cryptocurrency, I want to touch a little bit on microeconomics policies, right? So, as you guys know, like in the North America and also Europe and even Indonesia, like earlier this week, we actually raised our interest rates by 25 basis points. But in the largest economies in Asia, such as Japan and China, we're still seeing that the government is adopting a more dovish views, so they're still like reducing rates in order to stimulate the economy, right? So how do you think this is going to affect the cryptocurrency space now? I mean, given like these differences.
Yeah, I mean, I actually was just living in China the last 4 years, and the COVID policies have really affected the economy there. I know while the rest of the world has now been opening up, and the supply chain issues are getting resolved to the most part. They definitely don't have inflation like the West, so they're able to, they actually need to put more liquidity into the market, right? So China is for sure, more, actually increasing the interest rates right now. They just did that in the last few weeks. So, or sorry, decreasing. I said the wrong word. Decreasing. And then Japan's kind of its anomaly too. Like the Japan dollar is very weak, right?
Yeah.
But I don't know how much Japanese people are that much into crypto. Same with Chinese. Like I know there's an underground scene of Chinese people in crypto, but it has been banned. So I'm not sure how much it's really going to affect the global crypto markets as much as the West does. But of course, there's still interesting players, and there's a lot of money there that we need to consider.
So what do you think, Carl? I know that you like this question.
I'm just thinking, right? So, I think there's a story of two worlds, right? A tale of two cities. The first one is the Western world. You know, we borrowed from the future, consumed truckloads, and now we're paying the price, right? So interest rates, it's been a, you know, if you think about interest rate cycles, they always follow a pattern. You know, we overspend, inflation shoots up, interest rate goes up, creates a lot of pain, and it's like, uh, new growth. It clears the room for new growth. But where we're seeing this tale of two cities I talk about is the developing world is moving in a different direction, right? And where we're seeing they move in different direction is, a population. So if you put interest rates aside for a short term, you look at Indonesia, for example. Let's talk about Indonesia, right? A population that is highly mobile. You know, the number of people that I hear about moving cities to get jobs or working from Bali while they're supporting some sort of tech industry, right? That's increasing phenomenally. Number two, a population that is young and highly energetic. Right? I mean, if you look at the most 99% of Indonesians, they are super optimistic and positive, and that sentiment is going to drive value creation. The
Yay!
Yep,
Yay!
totally. The third, I really believe in this, right? The degree of innovation that is occurring in this country is absolutely phenomenal. You know, because of the optimism, the mobility, you're getting a huge number of creative minds flock here to actually build. And in crypto, we have this saying, right? I'm trying to control myself and not swear, but screw interest rates and all of that. But what are we doing? We're building, we are creating, and we're delivering, right? And you see the amount of innovation that's happening in these countries is phenomenal, Olivia. Phenomenal.
Yeah, so we are very enthusiastic people, right? That's right. Okay, so actually, right, talking about the economics and all of this, like, so you guys think that actually Indonesia is like the right place to be in terms of building right now? Yeah,
Yeah. I mean, look at all this energy out here. Yeah. How we doing? Day two?
yeah.
Yeah. Woo! Woo! All right. I better see you guys all at the parties tonight. All right. On some energy.
So this is why talking about markets is interesting, right? Because you see, everything is just like you're just going around and around, and now we're like at the bottom here. But as our very knowledgeable panelists have said, the market is going to self-correct. So
Yeah.
it's going to go up again and go down again. So that's why people talk about this all the time because at any point in time, you always find yourself in these circles, right? Okay.
Yeah, I mean, in a bearish cycle, it's a great time, like you said, for innovation and for changing your products up, making sure you're going the right path, right? You're more cautious with how you spend money, so maybe you think about your business decisions a little bit more, right? You can't just lend, borrow at any time you want. So you got to be more cautious about your decisions and more thoughtful, and that's a good thing, right? We need these up and down cycles to, balance the world, right?
Exactly. So actually, we only have something like 5 minutes left. So we're gonna get to the exciting part, which is, can we get your advice, in terms of trading, because you guys are professionals and you guys are insiders. So, from your perspective, how do you think that us, retail and also institutional investors, how can we trade better? Do you have any advice for us? Maybe Michelle, you want to start, or
You start.
or Ingrid, you want to start?
Follow the money.
Hold your money.
Okay, please elaborate. You said follow. She said follow the money, and she's from Nansen. Okay, so why don't you elaborate a little bit?
So,
Yeah.
so I think that as retail, right, like I think if you look at traditional finance, is that a lot of information is not easily accessible to the public investor. And I think that's where, when with blockchain, right, the immutable nature and the transparency of the blockchain, it democratizes access to everyone. And so I think that as a retail investor, if you don't have access to this, you should be looking on chain. You should be looking at the data. You shouldn't just listen to whichever influencer is telling you to buy this bag, or they're just trying to push their NFT out to you. But really, by following what some of the smart money, in this case, like the larger institutional players are doing, you'll be able to make a better informed decision on what you could possibly do as a retail investor.
I was going to talk about beers and pizza, but it's a good sign if you want to predict markets, right? Just try to predict the amount of beers and pizzas consumed at conferences. You know, when I first started, you'll go to a meetup, and there'll be, the cheapest slab of beer, couple of pizzas. People would rush to go get these pizzas at these meetups, right? There were no conferences, by the way. And if you look at today, man, it's buzzing, and and right next to a beach, and that's a sign of market development, right? And I think that's going to continue. That's the first prediction, right? So this is, I guess, my macro view. Uh, Beers and pizzas consumed at events. It's a good indicator of macro environment. The second is, I think I'm one of those old school, you know, Benjamin Graham kind of guys, right? Very value investing based. And there's one thing is, if you don't have the time to actually analyze the data, then you want to get into passive investing, which is dollar cost averaging. Now, it is boring because you don't make the 1,000% return, but you don't lose 1,000% in a day either, right? So, if you have favorite coins, whatever they may be, and you believe in those projects, dollar cost averaging has been proven time and time again to be highly successful. Now, if both of that fail, man, always stick to cheap beer and cheap pizza.
Heyo, like that. Yeah, I totally agree with everything that's been said here, but I'll just add briefly that, yeah, like you said, if you don't really have time to do a lot of research, of course, do your own research where you can, but if you don't, just go with what you like, you know? I mean, I don't know, everybody, we're living, we die, you're just living life, you're trying to make money. I don't think there's any crazy formula that you need to make. It's just do what you like, do what you enjoy, you know? Have a good time out there. If you find a project that you're interested in, invest in them, you know? And yeah, enjoy your life. That's my advice.
You wanna maybe touch a little bit on, like the trading tools that you have on Deepcoin? Maybe that will help, the retail investors to
Oh,
trade.
yeah, I guess I should plug my company more. Thanks for reminding me. Yeah, I mean, we're mostly focused on helping the retail users, right, for Deepcoin. We don't have any institutional investors yet, maybe. I don't know. It's probably somewhere we need to go, but I think that we like that, helping the little guys trade and earn money, on their own time. So, and with these crypto markets, they're open 24/7, right? So you can trade derivatives wherever you need, and we're always trying to educate and look for partnerships and whatnot. So yeah, check us out. I know you guys already know crypto.com and I'm in Nansen, but check out Deepcoin if you're looking for a different exchange and change it up.
Yeah, and you guys can go around and see the booth there for Deepcoin, like right around the front. And you guys, all right. So yeah, so we're actually nearing the end of the session already, but you guys know what you have to do. You gotta follow the money. Don't forget to dollar cost average, right, DCA, and just have a lot of fun, right? Okay, so
Thank
maybe
you.
any last things that you guys want to convey to the audience, before we wrap up? Yeah, we have like the last 1 to 2 minutes.
I'll go one thing, right? You know, if you look at every successful business, coins, whatever, right, have always started and created and delivered during a bear market. When times were tough, the founders, the builders stuck it out, and you see these tales of, absolute legendary heroism, right? That actually you went against all odds. And if there's a time that you're thinking of a project and you want to build, now's the time. And the amount of actual investment capital available is still there. The liquidity is still there, but it's a lot more discerning. And projects that have legs to stand on are still getting funded.
Definitely. Good notes.
Yeah, so you guys gotta remember that, okay? If you're gonna take away anything from today's session is that most of the successful projects are built and delivered during the bear market, right?
Thanks.
So it's really not so bad, it's currently like the time for you guys to build and, to do more research and hopefully on the bull run is going to pay off.
Yeah,
Yeah.
I mean, you could see like everybody's still energized this year. Since now
Yeah.
COVID's over, people can meet up in real life. Token 2049 is coming up. All these really good events are going on in the crypto space. So it's not dead. It's just down a little bit, and it'll come back up. We're looking forward to it.
Let's slow down a bit. Okay, so we're actually going to wrap up here. So thank you guys all for attending Coinfest and listening to our session. If you guys want to talk more with the panelists, you can go to the break room and you'll be able to meet them and talk to us personally. So thank you everyone, and thank you guys for like joining
Thanks,
the panel
Olivia.
as well. Yeah.
Thanks,
Thank
Olivia.
you.
Thank you.